Good afternoon, ladies and gents. Welcome to another video brought to you by Total Control Traders. It's been a minute. Hope you guys missed me. So the last video that we posted was in April. That's just over half a year ago. And that was when the yield curve inversed. And what's going to happen from there? It had a announcement, market is likely going to crash. We're likely going to see bear market going from there. And by the time that video came out, this is where the chart was at. Weekly had already seen a lower low and potentially a lower high. So let's just take a minute to see what's happened over that last half a year quickly. So ever since that video came out, we can see some bearish pressure coming in, making new lows, right? Actually, you know what? I'm going to speed this up to 10 times, so it's a little bit faster since it's been a half year. Continuing to make new lows. And then June, we saw a temporary bottom. A very nice run from there. And that brings us to now. So, I wanted to use ES1 as for this replay, because it's been a while since you guys have seen my charts, and let me tell you, my chart has gone a lot messier, I would say. Since you haven't been following along, it's gonna look a lot messier. So there's quite a few things going on here. This is my current chart. There is obviously a must-hold upper trend line on SPX, a must-hold lower trend line on SPX, and the blue chart. This blue outline is based on a chart pattern copied over from 2008 to now. And I try my best to base it off of where the bottoms are, where the tops are. And obviously with this chart, I can't remember whether it was this top was the most recent or this bottom as a reference. One of those two, because we can see that the move comparing to 2008 has now sped up. So what that brings me to, let's clean up some of this so we can see that projection. What are we going to call it? 2008 projection? Yeah, that sounds not bad. Let's, there we go. So based on that, looking at the current chart comparing to 2008 projection, we're looking at the drop coming real soon here. The drop is going to we're looking at beginning of December. The biggest drop, actually, one of the big drops. If you look at the projection here, boom, all the way down, right? Now, based on this 2008 projection, there's going to be a lot of different theories you're going to see out there on Twitter. Obviously, coming to my channel to view for my opinion, right? So my personal opinion, based on just the copying over chart of 2008, we're looking at a low of roughly about 1600. The couple other projections might be 1200, 1800, or 2000. It's going to be somewhere around there. So my personal anticipation is going to be somewhere below 2000. That, of course, is going to be if this is going to be the same way it's going to play out for 2008. Now, let's go and take a look at the market overall, see where everything else has been at. So first of all, US dollars. We're going to go through same tickers as we usually do, but on a weekly time frame for now, because we want to see the overall picture. Now, going forward, the video is not going to be so frequent. It's going to be the same idea where if there's anything major happen, then I'll jump on to make a video. Should probably take a little bit of time to mention why exactly it took so long for this next video to come out, over half a year. I took some time away to just reflect on myself, reflect on my trading. And I gotta say, the last few months it's working out pretty well. So I figured, some of you have been asking when the next video is gonna come. Let's do it. So US dollars, we can see that since April, wherever that is, April right here, it has been a straight run up. And now there's a broadening rising wedge, okay? Muscle upper trend line, money line down here. And we are seeing on the daily, there's a head and shoulders formation that has broken over or broken under the neckline. And now it has back tested continuing to drop. So what this could mean is bullish for the market. And when we circle back to the market, we're going to jump back and forth. Feel free to pause the video. You know, there's going to be a lot of charts going on, a lot of trend lines going on. As you can see, the chart is a lot messier than before, but I am keeping everything that is relevant. So every single one of these trend lines, to me personally, I think they are relevant, and that's why I'm keeping them. We'll be cleaning them up as we go. Actually, I wanted the GPs back. So there we go. So it's gonna look a lot messier. Based on that US dollars, we could be seeing a little bit more bullish momentum, which makes sense. The must hold, we are still some room. We do still have some room till that must hold upper trend line. As of right now, what I'm looking at is likely gonna be this trend line over here. So this is not too much. It's just a slight rejection, and then another rejection here, another rejection here. So what we can be seeing from here is a run up to somewhere around. Actually, no, that was the case from back here. That doesn't make sense from here anymore. So if we kept running from here, that would have made sense. If we kept running from there, would have made sense to come up to the GP and along that upper trend line. But because we've dropped from that last week's rate announcement, it doesn't make sense for the chart to go up there anymore. So what I'm looking at from here, based on US dollars, if we're to run, we're gonna make a new high comparing to this last GP rejection, just slightly over, forming that 8-hour or even daily bear divergence before coming back down. Okay, so that's based on US dollars. Now if we to look at the 10-year over 2-year, interesting. Anyways, if we do look at the 10-year over 2-year, the last time we had a video, it was right here, April 1st, yield curve inverse. What happened from there? We bounced back up, and now we saw that second inverse. Okay, there's a slight bounce just over 1% over here, and then we lost it. We've been under that 1%, so the yield curve remains inverse ever since that second time. And if you were to take some time to circle back to the previous time that it inversed in 2019, it's the same idea. Can't remember where exactly it was. This chart is not too accurate, as you know, because it is a dividing chart using one yield over another yield. It was somewhere over here that the news came out that there was a yield curve inverse, and then there was a second inverse here. And if you were to go back further, this is the 2008 crash. You can see the same idea. First inverse, and then bounce back up, and then second inverse, and it remained down here for a long time until the market actually corrected. So there's a very similar idea to 2008 right now. The yield curve remains inverse after that second time dropping below 1-to-1. Okay, so based on that, that validates the theory that there's going to be further downside on the market to come. Now, my anticipation is the market will have a big drop going towards 2,000, just below 2,000, maybe 1,600, as low as 1,200 SPX. And then from there, the bottom wise, I'm thinking it's going to be somewhere between February 2023 to June of 2023. And that's based on quite a few different charts of comparison that I've drawn. Don't have them handy right now, but just to give you an idea of what I'm looking at. Next is VIX. As for VIX, let's make this a little bit lighter there. Okay, not completely disappear. Okay, yeah, so this is no longer valid. Actually, it might be valid as we bounce up. Anyways, so as for VIX, we have seen a straight drop of, how many is this now? 16 trading days. 16 trading days of straight red. Gap up, sell off, or continuing to sell off. Regardless, money line, for one of the two money lines are coming up. And I'm going to change this so it's a little bit brighter. Right, so the first of the two money lines coming up. If we're to look at the money lines, one of them is bounce, lost it, bounce, and then bounce again here. So this is the lower money line. And then the second one is bounce, 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 slight bounce. So we zoom in, we can see a slight bounce here, lost it. And then we're coming up to that first money line now. And there's another bounce over here. But we're coming up to that first money line. Do keep in mind, however, that must hold line is quite a bit of distance below. And I used the monthly for this line instead. So lots of bounces, lots of holding. Another bounce, one more, one more. Lots of touches over here. So that must hold line is quite a bit of distance below. But based on you know, the yield curve inverse, the projection of when the market correction, what do you call it? Recession is gonna come. It makes sense, you know, if we're to start bouncing somewhere along one of these two money lines, as opposed to coming all the way back down to touch this must hold line again. So if we were to lose this middle money line, that is a red flag. You know, market is likely gonna break that must hold upper trend line over here. So with VIX, it's a lot harder to play VIX now. It is something that we just want to keep an eye on. But it's not something that's easy to play anymore, because due to the fact that TVIX is no longer tradable since 2020, 2021. So with that, you know, something to keep an eye. VIX over this week, if we're to drop for another day or two, we could see a big bounce coming in. Now the next one, gold, is in line with the fact that interest rate is rising, making it more competitive, another competitive product as opposed to buying gold. So gold has lost this must hold, this 1680 area. We zoom back, we were, for those of you that have seen the video from before, we were looking at that third bounce play, okay? Rejection, bounce, bounce, bounce. And then topping out where the previous resistance is. So when we look back at this one, rejection, bounce, bounce, very minor bounce, did not even come back up to the GP. So that is a red flag for gold. But if markets start tanking, we will see some bullish momentum on gold. As of right now, we are seeing a bear break, no follow through. Weekly, you could call this a weekly bear flag. We did just break over that weekly 8. Monthly, forming a bear flag, so this could go sideways for some time. And then Bitcoin, monthly bear flag, very, very visible, okay? Huge down drop of over 3 months, and then now it's 5 months of sideways action. I do anticipate at least Bitcoin to go down to 12,000. We could be looking at as low as 3,000 again. And if you look at every single pop, okay, that first pop in 2017 when Bitcoin first became tradable, it came back to the previous low, IPO low again at 3,000. And then the second pop came back to the 3,000 again. So there is a chance that we can be looking at 3,000s again for Bitcoin, but I do anticipate at least the back test of this previous highs, previous rejections at around 12,107, and that is also the extension target of the top to the bottom here to the lower high. Can't remember if this is yeah, so it's a 1-to-1 extension target. Makes sense. All right, so overall, to keep this video short, since it's the first video coming back, I am anticipating further downside, whether that's going to be from here or beginning of December, which is a month from here. So there are a couple ways, just to give you a quick idea of what I'm looking at. First scenario, reasoning behind first scenario is because of this trend line, rejection, rejection, rejection again, bull break, no follow through, GP rejection, and this day was the rate announcement, which by the way was an amazing play. Let's go back here. So they sold off all day, dropped below the trend line, and then rate announcement 0.75, bulls come in 30 minutes later, and the conference, and dropped it hard. That was an amazing play. So anyways, yeah, so we're to look back at this upper trend line, rejection, rejection, third rejection, bull break, no follow through, huge bear follow through. And as of today, we almost touched that upper trend line again. Okay, we are at the 0.5. We are at the short-term key zone. Let's look at the 4 hour. There is 2 short-term key zones. This one you can probably call it long-term now, but short-term key zone right here. Support, rejection. Trading around it, another rejection at the top part of the key zone, another rejection at the bottom part of the key zone, another few rejections at the top part, and then a support at the bottom part. So this is the short-term key zone that we're going to be looking at. I wanted to see that upper trend line touch today for that most ideal. It was very interesting how they closed it just below that 0.5, just below that key zone. Tomorrow, there is a possibility that we can see big bears coming in, bringing us down to this GP alongside this bottom key zone before a bounce up. Okay, Thursday, Friday, going into the weekend, this was the area. Bears unable to break down over. And if we're to look back at another scenario, can't remember which one it was. Oh yeah, over here. So same idea, key zone, in line, in confluence with another trend line, and bears kept knocking on the door but unable to break it down, and then you see bulls coming in to that upper trend line before rejection. So very similar scenario here. Bears keep knocking on that door of the trend lines. There's no key zone here. There is some support resistance. That's why there's a couple lines there. And also the 0.5 from the bottom to the top. So triple confluence here. And unable to bear break. And now we're seeing some bullish action coming in. Now the interesting part is we are at that upper trend line where it last rejected. So Thursday, I believe it's Thursday is the CPI numbers, which is also 3 days out. So there is a chance that we can see a pop over to that GP again. So scenario number 1, from here, tomorrow, if we see early signs of bear, we can be looking down here to that GP in confluence with the key zone. Scenario number 2, if we see slow grind up, Apple has been somewhat strong today, not really, no volume, but and there was also a gap down. The main thing was Microsoft is strong, Google was relatively strong, Meta was okay, and Amazon was weak. What was the other one? Tesla was weak, and Netflix was okay. So tomorrow, if we're to see some strength coming into the open, what we can anticipate is a bull break to that GP, short-term GP of this drop, and then the back test, and coming up to new highs before another drop down. Okay, now this yellow line, short-term trend line, was the one that I was tracking today. This trend line is not the best sort of trend lines, but there are a few reactions to it. So bounce, lost it, straight buy up, another back test, and then bounce again. So on the short term, if we're to see bears coming in, they're gonna need to lose this short-term trend line tomorrow, first thing. Okay, so that's it for the video. Forecast, looking further down. Play accordingly. Don't make sure you keep your capital. Get ready for that big bull run after the market bottoms out. That is gonna be a, what do you call it? $1 million maker, millionaire maker, billionaire maker. If you're already a millionaire, that's gonna be a billionaire maker. Okay, keep an eye out for it, and leave a comment down below. Like the video. Thanks for watching. I will see you in the next video.